All right. Good morning, everybody. So today is PPI, but it's also a lot of information coming out of Europe. So it's going to be really heavy until around that 10:30, 11 o'clock time frame. We got to get through everything Europe's going to throw at us, including um, Christine Lagarde and a few other European Central Bank speakers. We do have retail sales today and some job numbers, but the biggest thing is going to be what's coming out of Europe. So we take a look at something like FX Street, kind of get a feel for what has the highest impact today. And we can see European Central Bank press conference. That's going to be where Christine Lagarde starts chipping teeth, some retail sales, and then they're going to do a rate policy decision today. So that's one of the it's really all one big bundle. Think about it from how the US would have an FOMC day and they would release their decision. And after the release, Powell comes out and talks. So it's the same thing, only it's over in Europe. And instead of Powell, it's Christine Lagarde. We do have additional auctions today as well. So worth kind of keeping our eye on that. Once we get through the auctions, we should be pretty good on the day, but it's going to be a bumpy ride to get there. We are green on the screen. Very little is down except for precious metals and airlines. And even with precious metals, it's not down by much. One of the main things we got to worry about still is the dollar. We're looking at this on a daily chart here. It's that 104, 105 area. And I mean, sure, we've been, trending to the downside here for a while. Through 2023, we've held that 106 as the high on the year, but you can't argue how bullish that looks from around mid-July, especially if we put it on a weekly and we just look at how many weeks in a row the dollar's been moving to the upside like this. It's not common to see a market make that many weeks in a row green, right? Even 2 weeks ago, that last week in August with that doji reversal. So this is the first week in a long time where the dollar's inside week, and I wouldn't count it out yet. Just like on this doji week I was referring to, it rallied back up at the end and it closed inside week, but it still closed green. So we really want to keep our eye on this dollar. It's going to be one of the pieces going forward on, what are we going to do? Where are we going to catch that next capital rotation in the markets? So the dollar, that's one of the issues. We still got a problem with bonds continuing to fall out. This is the ZB on the weekly. And while we have this October 2022 low on this weekly chart, and we've revisited it, the bond bulls really didn't step in and clean house here. This is not encouraging in any way. They need to get in here, or this is likely going to break that low and start stepping lower. And it's not necessarily the bonds, right? It's more of interest rates on the other side. We look at TNX, we look at TLT, and TNX is just looking really bullish. It wants that breakout. US dollar Japan, again on a weekly chart, and we're inside week. And Bank of Japan says they're good if it stays below 152, but I don't take them at their word because they've said we're good, and then they go in and do interventions anyways. So I wouldn't hold that 152 in high regard. I think they'll step in sooner than that, especially if they can get a coordinated attack like the last time. They didn't do it by themselves, right? They had help from all around the world. And I think that's going to be a big part of it, just knocking it down before it gets to that 152. So it continues to be something on watch. You really want to just keep your eye on it on a day-to-day basis. And we are inside week. So, setting an alert on either end of that previous week's candle is just a nice way to keep track of what's going on. Because as long as we're staying inside there, kind of really got to believe they're not going to do any intervention. But if we get outside of it, yeah, game on. All right. We're seeing some moves in crude again this morning, retesting those highs from yesterday. So we backed off. We got into the highs on Tuesday, into Wednesday, and now again Thursday, and we broke through. Each one of those days has gotten a little bit higher and a little bit higher. Crude isn't done. We're still looking for 92, maybe 95. It's not going to come all at once. You see how we keep kind of pulling back off that high. But we really want to keep our eye on that. And we do have parity or an inverse market. Those bonds that I was just talking about, that 119 was selling off. So we had a good run yesterday. Want to see it hold that 50%, and it's just going to be one step at a time, right? Just not falling is a good start, and then keeping what it runs. So it made it a good start yesterday. It's got to hold. I'd say keep that 50% in focus. If it gets below 50% of yesterday's level, then we're likely to get back to the low of yesterday. So when we kind of put it in focus with all of these, US dollar, Japan, the US 10-year, the Dixie, the bonds, crude. We're starting to see a little bit of a turnaround here, a little bit of a push this morning back up, but we're not seeing it follow through in the dollar. So let's keep that 104.80 as kind of a line in the sand. And 4.28 on the 10-year. All right, full house all the way up until 11:30. If we can get through that, whatever narrative we have at that point should be the afternoon move. So you afternoon 0-day traders should be good to go. Volume is starting to normalize a little bit more. Things are looking pretty good. We've got a market maker move again this morning, but so far it's been wrong all week, right? We've had to just kind of ignore it. And today's no different. So it's still kind of a broken tool. It's because of the contract change. So I wouldn't get too hung up on it, right? Just you can manually see if we're in a market maker move just by coming in and checking in the options. When the front series is higher than the next series out, then you'll have a market maker move. By next week, it should be back to normal. All right, on this move this morning, that breakout wasn't just a breakout of yesterday's high, it was a breakout of last week's high. So we were an inside week breakout. 45.31, it's a cog line, kind of a nice line in the sand. We need to keep it. Down below here, we got the 10-day and the 20-day laying on top of each other. So that it's two, relatively strong moving averages, and we're on top of them. Now, we don't look at them as support and resistance. They're just areas where we anticipate a reaction at a price. And then they're more of, a line in the sand. Are we above them or are we below them? Because that position holds weight in the analysis. You can see the daily pivot point is a long ways off. So we do have an MDP in it, and it's far below us. The way that this thing calculates is it reads what was going on yesterday, right? A daily pivot point is calculated by high, low, close divided by 3. Since we had such a sideways day yesterday, it actually printed a lower pivot point than the day before. And now we've had this nice move with the breakout. So it's far away from us, but it's an MDP at the moment. It's very likely that we won't hit it, and it'll be tomorrow. If it remains an MDP, tomorrow's when it will have weight to it. We do have that significant voodoo line, 45.38. We tangled up with it on Tuesday, and it was a fantastic play. Thankfully, I wasn't the only one who caught that either. Someone gave a shout out that we were right there and caught that play as well. So, those voodoo lines, they're hard to trust. Like I talked about the other day, I don't trust them because I can't replicate them myself. I can't duplicate them. I don't know how they're created. And that makes distrust. But I still keep track of them, and I still anticipate a reaction at a price when we get to one of them. And we're getting really close to one of them. This is not the first time this week we've broke outside of last week's levels. We got through there Monday and Tuesday, and we weren't able to keep it. So now our own week are the levels that we've got to get through. If we take it back out here to the weekly for a minute, we've now got our own high that we need to deal with, right? But on the weekly, we are above all the major pivot points, and we've got some clear sailing if we can just get through that 45.50. But it's such a significant call wall that it's just going to be a hard row to hoe, right? That's what we're focused on, is getting through that 45.50. Getting to the 45.50, not so bad, right? That's not really going to be too much of the issue. It's just getting through it, getting on the other side. We do have the ADR level 45.49. One thing I've started to do in the last few days is start marking these out, because I don't have, the way this indicator works is I get today's levels. I don't have the old levels to be able to point out how often we turn around or stop at one of those levels. So starting to get into the habit of marking those out. And I believe if we use something like the ATR, it will allow us to leave them on, right? And we'll be able to see old examples of where we hit it, and be able to look back and do research. But I've started marking them. And I think what we're going to find is that the ADR half has a lot more weight to it than what we've been giving it. So we'll see. If you don't have an ADR, you can just use the ATR off of the daily time frame. Go out, set your ATR to 1, look at it on a daily chart, write the number down, come in and do the math, and move your levels accordingly. And no, it's all that nerd stuff. 10-day, 30-minute volume profile, classic V shape. We did move the point of control down, as I talked about earlier this week. We would very likely bring it down to us. We could see that shallow area that I discussed earlier in the week, and 45.50 is right in the middle of that shallow area. It comes down with around this pivot point here. We're going to lose this price today that's on the left side of this chart. As the day unfolds today, every new candle we get on the right is going to take a candle away from the left. And by the end of the day, that shallow area will be gone. It'd be interesting to see, how much this profile changes at that point. But it's very clear that there's a price shelf overhead. We got a lot of trouble, a lot of resistance, a lot of old volume up there. It's going to be a struggle to get through that 45.50. And even when we do, we got all of this to contend with. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. Mapping out the 5x5, we still have that BPOC. It was really close the other day. Really thought we were going to hit that thing, and we didn't. So it's still on the table. Haven't moved it yet. That'd be 45.39. So one more thing, right? And the cool thing about these VPOCs is you can usually get a first touch play, right? We run up and hit it, kind of pull back off of it a good 5 to 7 points. I know 5 to 7 points doesn't sound like much, but when you're holding 10 contracts, it's perfect. We're about 1.5% above the 10-week. That's a good starting point. We can get anywhere from 3.5% to 4% away from the 10-week, and we still wouldn't be overbought at that point. So no moves that we've seen so far in the last week or two has been too far, too fast. We're not overstepping our bounds. We're not due for a pullback or any kind of overbought discussions, nothing like that. Kind of flip this over now and look at a daily. We're just barely above the 10-day at all. Think of the 10-day as the center of the basketball court, right? From that point, you've got a long ways that you could run in either direction. Well, for us, the directions are up and down. So it could move down 2%, it could move up 2%, and it still wouldn't be overbought and it still wouldn't be oversold, because we're right in the middle of the range. I mentioned that range as just kind of a nod towards linear regression. So you can see this white line here on the chart. It runs from the lower left to the upper right. That's a linear regression line. And it kind of highlights the model, right? That even though the market is in an uptrend, it still has these drawbacks. So we've got an idea of what price should do, and we've got an idea of the range that it should do it in, right? And it becomes important if things start to exceed their expected move, no matter what time frame you're measuring, right? There's always an expected move. For this week, the expected move or the expected range is within this small box. And unless or until we get out of that box, we have not gone too far. We haven't gone too fast. We're not overbought. We're not oversold. Now that's a week's worth of measurement. So on a day-to-day basis, we have the same thing. We can again draw the same kind of levels using the same kind of math and get a more narrowed time frame. You can even break it down into an hour or a minute. It's using the square root of time and close to close values. It's got a couple other pieces in there. The math gets a little fun, but it is doable. All right, what do we got up this morning? Uranium, China ADRs, Bitcoin, energy, precious metals, building materials, a little bit of emerging markets, so a little bit of China in there. And we have the FANGs. So things are picking up pretty quick. We can see the trend is slowly moving these things higher. Soon it's very likely we're going to have consumer discretionary and technology also above that half mark, but they're not quite there yet. The interesting thing is those precious metals, they must be just now turning around. So here with US dollar Japan, that little rally up earlier this morning was knocking those precious metals down. So with this starting to flatten out, you can see where we're at for the week, right? I know these smaller charts aren't always that easy to work with, but the gap between Friday and Sunday is right there. The new week started, and for the week so far, we haven't done anything. But it is getting back really close to where it ended the week. At least it tried to until yesterday, right? That big candle there is our CPI print from yesterday. And now, even since CPI, US dollar Japan is still holding inside that zone. There's the CPI print on the dollar. We're still holding in the zone. Same thing for bonds. There's the big print for CPI, but we're not in it anymore, right? We broke it. So that's the 10-year. Here's the bonds. That one's to the downside. So this one instinctively is to the upside. These will be the two that you want to watch. That's your tell. That'll be the levels. That'll be the levels that you want to keep track of, getting the dollar out of that box and getting US dollar Japan out of that box, preferably to the downside. If they do break through the top, we'll have every expectation of the S&P and the NASDAQ heading back to the downside. This move in oil is getting to be a little bit of a concern. If it doesn't slow down, we're also going to see an impact from that too, right? So if we start to see oil really kicking its heels up today, making that move to the upside, we could very well see the S&P react to that in a negative way. Now, there's different ways to get these numbers. FinViz has a nice little graph that'll show you how things have been doing on a monthly, a yearly, 6-month, quarterly, however you want to do it. And it's free. You don't need an account to do that at FinViz. So when we look at how things have been doing in the last 5 days, the pot stocks are still up 17%. And the EV markets are up nearly 6.5%. So there has been some pretty fantastic moves. Steel is still down more than 4.5%, and crypto more than 5% to the downside. So far this morning, crypto's up 1.4%. Those China ADRs are around 1%, and then the EVs, they're up more than half. That's a really good start on the morning, if you think about it. right? Well, if we're going to see a bullish day in the market, we've got to have enough groups, right? So we've got the China ADRs, the FANGs, the EVs, and the cryptos. That's a strong group to play against just right there. With those China ADRs, we got quite a few to choose from. Baba, Baidu, JDD, JD, PDD. Yeah. Yeah. PDD's looking pretty good. Let's knock these off of here. It's a little noisy. So we're getting back up into the top of this zone here. It's that if 80 then 100 thing. Well, we got to the 100. We're done with that. We still have that massive week that we need to deal with. And we're now inside week, inside another week. So the compression is there. You can see, you know, this current week that we're in, if we can get back above that 100, then we'll challenge that 103.60. It's a good start. And this isn't up very much, right? It's having a problem with that high of yesterday. So we want to get above that first. The high of yesterday is also the high of the week. So we would be looking at just getting through this level here, that 104.40. So if we can do that, then we'll take that 103 as our next level, 103.29. And it's not that we're overly bullish PDD for any, you know, it's just the China ADRs. JD, same thing, although it is inside day breakout and PDD wasn't. So that's a good start. But I mean, you can see how this thing has just been in a protracted downtrend. It's still a turd by any stretch of the imagination. This is not a good company to trade, right? You wouldn't want some long-term buy and hold in this. We don't even have a really good reason to try to bottom fish in this thing, right? But for a trade for the day, after so much compression so far this week, we could easily start an inside breakout that lasts at least up to 50% of this big candle here. So around 33.19. And we've got room because we're right around the 32. Got Baba as well. Although, you know, looking at these, how many of them have already pulled back off of that high that we could very easily start to lose that that group off the list. So if we do lose those China ADRs, then we'd want to flip over and focus more on some of these other names, the EV market or crypto. So you got PD, JD, Baba, Baidu. For the FANGs, I don't think I even have to label these. Everybody's got this down pat by now. Apple, Microsoft, Amazon, Snow, AMD, Tesla, Google. And you know, a lot of these still have that they're in that AI conference this week, and or they are at trial, like with Google. If you ever forget which ones are in the NY FANGs list, you can always go to Google and type in NY Fang Index, and it will take you to the ICE page and show you the names that are in there. Very likely not all of them are running, right? If our list is looking at the fangs as a group, it's very likely one or two of them are really doing all the heavy lifting. We got that breakout in Google. We were kind of examining this yesterday for an opportunity, talking about, getting through this next zone or this next level. So we do got 138 as a line in the sand. It's right up here. And we're not there yet. It's a high from a couple of weeks ago, end of August. Or Microsoft, getting right up to the high of the week. So right now we're just dealing with our own high. The high of the week came from that gap up Monday, and we kind of sold off since then, rallied back up. Microsoft has been all over the place this week. So right now, our own week is the high that we got to deal with. If we can get through that, there is this 50% mark, should be really close to us. Yeah, 340.47. That'll be the next area for Microsoft. So if we get this breakout, that's the target, 340.5. If we get through that, we'll target the open of the week, 346. Amazon's been doing really good, holding above that 10-week. We had a reasonably decent TRB. Wasn't overly excited about it, but we made it to the top of the zone, and 145 was the line in the sand that it needed to get through. So getting through that and closing above it today is going to be a really big deal. Now that we are above it, it's got to keep it. Right? If we can keep it, we got 145 on the horizon. That's a lot of work that it did already this week. So, we're not talking about 155 at the end of the day. All right, Tesla's not taking advantage of this move. All right, so with all the other fangs up this morning, Tesla's not one of them. We're still inside day. Got a lot of compression here. It needs to GTFO. It can do it, but think about the pivots that it's got to get through. First, yesterday's high, then Tuesday's high, then we can focus on that 288, what is that? 287, 286.62. So it got a long ways to go. Same thing with snow, nothing there. It's gapped up, but you got to think about all the work it needs to do to get out of that. And AMD, it's putting in the work. Nice follow through from yesterday. Needs to get that breakout started. I kind of like this on AMD because it's not up as much as the others are up, right? So I like that. Out here on the weekly, it's still a dog. There's nothing good about this. So it has a lot of work to do if we're going to expect, AMD to start turning things around. But for right now, we just got to get out of our own week's high. And then we'll focus on last week's high. So one step at a time. And that should line up with this candle here. Yeah. So around 112.75. Kind of keep it simple. So that's the fangs brought in with the China ADRs. Then we've got the EVs. So NIO, Yeah, I mean, it's off the bottom, but that isn't overly encouraging. It looks like it's already trying to give it back again. It's a good start. Out here on the weekly, we got nothing. Got a TRB kind of starting to set up, but it's still just setting up and it's not ready for a TRB breakover. XPEV, same thing, nice little gap up. Has a really big gap to solve from yesterday, which might help a little bit with that lift to the upside, but there's still a lot of work to do here. Even just starting with something like that 50% line in the sand, 18.5. Let's get through that. Then we can worry about that 1985 level. In KLA, not much of a gap, and it's mostly giving it back again. Lee. Yeah. Rejection on that high of the week. So that's going to be the focus. We got to get through that. Then let's worry about that 50% level. Well, they're the same thing. So 41.26. It's a good start though on the EVs. On the cryptos, BITO is getting just a little bit of a lift. We are, as I'm talking, breaking out from yesterday's levels, but on the week, we've still got a high to deal with. And then we'll get this 50% mark after that. So the high of our week and then 1375. They're not too far apart from each other. When we're thinking cryptos, we could also, kind of bring in something like Hut and Hive, but these are really thin markets. And you can see that right now the algos are touching them. That's about it. Nothing's really coming through yet. Same thing with Hut, a little bit of lift up, but no flows here yet. They're really thin markets. So the thing is, that's a good start, but we want to see those financials come in, and it would help if we could get, like communications or something. What we have up is enough. We don't need those other ones, but a rising tide lifts all boats. And when we do have things that are up, we want them to be big enough to start influencing the rest of the market, right? The fangs definitely are big enough to influence the rest of the market. Financials would be fantastic if we could start getting some banks moving in the right direction. So see, like Bank of America got that little bit of a gap up. That's a good start. Wells Fargo, not much there, right? A little bit of movement, a little bit of upward, but not much. So we want to see those banks start to come in. That'll help. Otherwise, we've got the ingredients for a push today. With this many groups headed to the upside, the ability for us to get an inside week breakout at this point, or I should say keep it, is 100% on the table. Let's look at it from this point of view. This is the candle of concern that last week in August for the ES, the NASDAQ. Kind of just go put it where it needs to be on whatever index you're looking at. That's the one, right? When I was going through all those names a little bit ago, that last week in August was the candle that kept getting marked out because it was the biggest week. So right now on the S&P, at least really on the ES, that's the level that we really want to focus on. 45, 47. We get through that, we can target 45.62, and then through that 45.79. It's not that bad, right? One step at a time. The next pivot of concern is Tuesday's RTH high, and then Monday's high, and then that 45.47. Just to check the pivots, make sure there's nothing in our way. Sure enough, there is. 45.41 quarterly level. That's off of the higher time frames, right? Going out. That's about the biggest chart that I use is a quarterly. And right on the other side of that, 45.44. It's more of a minor level, just a weekly, but a weekly is, big enough to have some weight to it. It's that quarterly one of concern. So 45.41 is going to be a really big deal. It lines up pretty close with those Monday levels. So you don't need my lines on that. Just keep your eye on Monday's high. That'll steer you in the right direction for, what are we about to hit next? I've done videos on that too, right? How I get those levels. That way you can do them yourself. Things are looking really good. We've got the capacity for the move. We just got to keep in mind that Europe very likely is going to set the tone through the morning session. And until they close, they might dominate. But look, you get a day like this where it flips around and it runs the other direction. On this one that I'm pointing at, that was a 1 o'clock reversal. Today at 10:30 or 11 o'clock, any negativity or positivity that we're getting out of Europe today, it could stop on a dime right at 10:30 or right at 11 o'clock. So be ready for the flows that are coming out of Europe to shut off completely and for the market to just flip its script right over. Be ready for that today. Now, sometimes we get news and it's the catalyst that carries us all day. Other times we get news and it kind of fades out as the day wears on. And then there's this. This is a completely different kind of thing. And I've seen it happen more than once where we get something out of Europe and it's the driver for the entire morning. And as soon as Europe closes, whatever it was that we were doing, down or up, it just completely flips like a rug pull. So that's your warning, right? Hey, keep your eye on what's coming out of Europe. And if the moves that we're getting today is because of that news that came out of Europe, watch for Europe to close and for those moves to stop, because their influence will stop. All right, FWBI. It's one of those penny stocks. Been trying to offer up at least one of these a day. It's not my space, but there was requests. So this is catching flows. It's been in a consistent, persistent downtrend as penny stocks tend to do. And this morning it is above this high here. You want to measure that level and project it upwards for any sort of targets. And NBY, pretty big move last week. I guess that was this week. That was Monday. It's getting shook up a little bit this morning. half of that move. It's about 88 cents. It's around there somewhere. I didn't mention him. Should have. It was a part of the whole Bitcoin thing. Mara, Coin, Riot. I just really hit on Hut and Hive, but there are those as well. So Mara's got a little bit of that pop up. $12.22 is the level of concern at the moment. We're nowhere near that. We still got to get into that zone starting at 10.50. So let's see Mara at least get outside of its own range from yesterday, and then work on Tuesday's range. It's got a lot of work to do. Riot, nice recovery from yesterday so far, but just like with everything else that we've been talking about that's really beaten down, this has a lot of work to do, and it's IX10. So we got to get out of this box. The thing is, the longer we stay in that box, the more energy we're building up. And when it goes, it very likely is going to be a fantastic move, just like back here where we had a really big move. But when it goes, it could stay sideways like this and even fade down lower. You know, it doesn't owe us a big pop anytime soon. Plus, the move doesn't have to go up. It could just as easily be a big move down, like this last one that I just measured. So a sideways market building up energy. We're holding inside of yesterday's range. Let's get out of that, and then let's get out of that high from Tuesday. And they all three look the same this morning, right? Riot, Mara, and Coin all have a similar chart, all fighting with their own range from yesterday. But Coin here, I mean, that's a really beautiful setup. Getting through that 86.5 has a lot to offer us going forward, but we're so far away from that at this point. So that's what I got for the penny players. Everybody, be careful, be safe, watch the clock, and I will see you all tomorrow.